So let's go through this and we'll see what's going on and where to focus your hard-earned money. Biotechnology. What does this tell you real quick? Stay away from biotechnology. Done. Don't overthink it. Cloud computing. Below the food. Look at this. There's nothing good here. Move on. You don't even have that. Dow Jones Internet. There's nothing good here. Leave it alone. IBD 50, lagging. Okay, it's below the 200 day. It's below the falling 50 day. It's about to take out the lows from 3 weeks ago. There's no power here. Just leave it alone at this point in time. Gold miners, ugly. Junior gold miners, ugly. Gold, a little bit better, but it's below the 200 day. Nothing really special here, okay? This was good. This is just loose and choppy. Look at this. It runs up and you think, oh, that's pretty good. And the next day it gaps down. It's loose. Clean, tight, simple chart patterns are the most reliable to pay profits for us. There you go. Cybersecurity, bad. Biotechnology, another biotechnology ETF. Look at this. You won't see this in any chart book saying, well, this is what you look for to buy. Nope. Online retail, bad. North American technology. This is the 200 day, folks, the purple line. Look at the selling on this. That's not good. Dow Jones Medicine, dropping like a rock. Look at the selling volume. You just have to leave it alone. I'm not negative at all. I know that it's easier to make money when you're swimming downstream. You're just going with the current. On a lot of these charts, the current is down. It's not up. It's not going up. So you got to be careful. Mid cap, it's on the 50 day. Maybe it'll bounce. Not bad, okay? Home builders got cracked. That's not good. This was a leading sector, folks, and it just lost a ton of leadership right here on heavy volume. Be careful with it. Growth industries, look at this. Lost the 50 day. That's the green line. Heavy selling volume. The S&P 500 growth index. This isn't so good. Small caps below the 200 day. IWM, that's not so good. Airlines kind of hanging in above the 50 day, below the falling 200 day. Just look at this. You won't see this in any chart book saying, well, this is what you want to look at to buy. Here we go. Regional banks. Now this is looking decent. How about that? And it has looked decent. Back here, you could have said, maybe I should look at some regional banks. Yes, and we have. There you go. Biotechnology. Another biotechnology ETF? Forget it. Mid-cap, still chopping around here. Needs to start getting back above the 50 day. Okay? See that line? I'll do something for you that will help you. We'll just continue the line on. There you go. Needs to get over that line with volume. Not bad. Not bad so far. Oh, Meta, nothing. Oil services, acting a little bit better. So what does this tell you? It says, maybe I need to look at a couple of oil services stocks. There we go. Online retail, dead. Forget it. U.S. infrastructure started to look pretty good, but look at that reversal bar. Not a lot of great things there, so be careful. Software, another software ETF. Look at this. This was a leading. You want to see something amazing? This is how things change. Look at this through here. This was beautiful. And then it started to lose its luster in February of last year. And since then, it's really done nothing. There you go. QLD lost the 50 day right here. The green line is the 50 day on heavy selling volume. That's not good. Okay, I'm just telling you, that's not good. Be careful. QQQ, similar situation, heavy selling. Retail, kind of hanging in, but it's below the 50 day, not a lot of power at this point in time. Cloud computing, another cloud computing. What has this been telling you for about a month and a half? Stay away from cloud computing stocks. If you knew this and heeded this, it could have saved you a lot of pain and heartache. Silver, nothing good here. Steel, showing a little bit of life, a little bit, but it's below the 200 day. Really needs to start showing some real power with price and volume. Just know it's below the 200 day. That makes it tough. Semiconductors lost some leadership. Look at the selling on that bar. That's not good. Another semiconductor ETF, not so good. Spiders, support on the 50 day. That's one plus. The spiders have support on the 50 day. But there's some selling volume in here. Be cautious. Look at that. Look at those red bars. Look at the height of the selling bars versus the height of the buying bars. A lot more selling than buying. There we go. Same thing's true with SSO. Solar. You just look at it and say, I'm not going to buy any solar stocks. And you should have been saying that since way back here at the end of November. And it would have saved you a lot of heartache. There we go. Small caps lagging. Uranium chopping around. This is a great lesson for everybody. You see this bar? People glance at it and say, oh, it's a green bar, right? On good volume. First off, it rallied up to the falling 50-day and fell down. Second, it gapped up, it ran up, and then reversed, and it closed. See the close right there? Below where it opened. Even though it's a green bar, it was met with selling pressure, and it tells you stay away from uranium stocks. Oil doesn't look too bad. Okay, that's something to take note of. Aerospace and defense, this is just chopping around. There's nothing good with it. Home builders was really great for a long time, but now look at how it's starting to fall here on volume. It's lost its leadership. Materials still hanging in here, right? But look at the selling here. Could lose here, lose the 50-day. The home builders are getting hit. Materials could go next. There we go. It'll tell you. Now, energy. This is looking decent. We're in this, okay? We're in good shape. We'll watch this and see what happens. Lock some in just in case. Financials. Look at this. Got this going on. It's above the moving averages, and it broke above clean tops. There you go. And it's got some green in there. That's it. I'm not endorsing buying it. I'm just saying this is a sector that you could look at. Financial stocks. Industrials, kind of chopping around here, okay? It's above the moving averages, but it's a little loose, so be careful with that. Technology was really strong, lost its leadership for right now. Look at this, fell below the 50-day on volume. Maybe it'll bounce up next week, but at this point in time, no real power there. Consumer staples. This is hanging in. Consumer staples, things that people have to have, a defensive sector, and it's acting okay. It tells you that safer money is going to the defensive stocks. Here we go. Utilities just chopping around. All right, maybe it'll start to lift off. It's okay. It's all right. Not bad. Consumer discretionary, the discretionary stuff, not the stuff that's mandatory, but things like, yeah, I need that, but not really. I don't need it. I don't have to buy it now. I have to buy toothpaste. I have to buy deodorant. Those are things that are required. Right here, little sloppier, be careful with discretionary. Metals and mining. People say, oh, this looks really good. Team, I'm going to share something with you. When you get a stock that runs up, gaps up, runs up and reverses and closes near the lows, this isn't a thing of leadership at this point in time. It's indicative of a lot of the crud going on in the market right now. Be cautious. Oil and gas, I like these tops across here. It's another energy play. Needs to push across these tops. Already have a price alert set. Energy, okay, something to look at. Retail, dead. Look at this. Leave it alone. Stay away from the retailers. Software, another software ETF, dead. Leave them alone. So we look at the MAXLIST. Love these. There's Apple. In Apple here, we finally sold the last of our shares through here. Said that's good enough. We're very, very happy with that. That was a great gain. Great gain. And by the way, we had sells up here too. It's done for now. Now, what could it do? Maybe it'll start to push back above the 21-day. We'll watch and see. We'll be prepared. Amazon, really lagging here. It's below the 200-day. That's rough. Needs to start showing some life. This was a weak close here, and here, and here, and here. So, and again, it's below the falling 50-day and the 200-day. So it's lost its leadership for now. Alibaba picks up a little bit, but it's below the falling 50-day. There is some volume coming into it. That could just be some short covering coming in to buy. It's not the best pattern in the world. And here you go. That's the 200-day. I mean, this has been a rough road. So be careful with it. I'm not saying not buy it, but there's a ton of overhead supply. For those that don't know, overhead supply, people that own it up here, people that own it in here. And if it goes up near that price, what do? They sell. They sell. That's overhead supply. BIDU, similar situation. You know, this, you're not going to see this chart in any book saying, this is what you look for. Facebook needs to push above these tops right here. Till that happens, not a lot of great things going on with it. Okay. OnePlus, it did demonstrate good volume and good price action on Thursday right here. And it pushed a little bit over the 200-day. Gave it right back Friday. Needs to start showing some life. Google. Whoa. Look at this. This is why you don't argue with price. It's like, oh, it'll be all right. You know, It's like, oh, you bought it pushing through the 50-day and it closed down. Now, it'll be okay. On its starts, it'll be okay. It'll be all right. It's Google. It'll be okay. It'll be all right. Oh, gee whiz, what's happened here? There you go. Keep losses small. Always. That's why we love admission winners. Clean and simple base entries. Price is good above the line and it's bad below. Case in point, you've seen the chart before. The buy right there. It's clean and simple. You can draw it with a crayon, but don't do it on your monitor. It's just clean and simple, and it pushes through on a volume pickup. That's all you need. Go back to Google. Let's keep going here. Here is Goldman Sachs. Started to lift up, gave it right back. That's indicative of the kind of market we're in right now. All right? I mean, this was powerful on good volume, and then it gave it right back. So just be aware of that. Don't argue with price. MasterCard's showing a little bit of life. Maybe it'll start to get a little better. There's potential. Microsoft was a great run for us. Had double tops here, started to fall. Okay, we're gone. We sold. We're out. And we missed this. Gone. That's it. Netflix. This is the perfect example of great buy here and great buy here. Runs up, sells into strength, sell more here, sell last shares right here. That was it. That's a great gain, folks. And that's not bragging. That's just looking at the numbers. It's reality. And isn't it good we did? Because it's like, well, Netflix has a unique market niche that other companies don't have. And I'm not knocking Netflix. Please don't think this. But we've got to lose that mindset. Opinions don't pay. Forecasts don't pay. Analysts don't pay. Research reports don't pay. Periodicals don't pay. Television stories don't pay. Price pays. Don't argue with this. I encourage you. Good buy here. Good buys here. Rallies up. Sells into strength. Out. And if you hadn't sold any, guess what? You now have a loss. You've let from here, we'll call it 550, 560, up to, we'll call it 680. Okay? 120, 130 points. Yep, and now you have a loss. There we go. And you know what this is, by the way? This is a big head and shoulder top formation. So there you go. Square. This is not good. I won't say anything else. I'll just get in trouble with it, right? NVDA is great. I'll make this a little bigger for us now. But it has support right here. Needs to start showing some life. Here's a really simple investing maxim for you. If you focus on stocks that are above the rising 50-day, you'll do really, really well. Okay. Now, I'm not saying this isn't going to bounce, but just things to stack the deck in your favor. All right? Just for what it's worth. And also simple patterns and also good market environment. All right? Tesla. Tesla was great here and here. And you know what we did? Up into here, we were selling. Got really loose and we sold it. It was gone. Then it bopped around here, picked up again here, ran up, pulled through, gapped up here. We're selling into this. This was a gift. Selling to this, starts to drop again, and then you're out. By the way, see where it says sold? Yeah, sold. Please, no 5-minute charts. Just looking at the bigger picture day charts. There's a ton of money to be made if you know how to do it. Manage it. And it's simple. And there's low stress. And the final point I'll make. When you're wrong, and you will be wrong, we're all wrong. I'm wrong at times. Anybody who says they're not is either lying or doesn't invest. You've got a very clean and simple base entry, which gives a very clean and simple base exit for a much smaller loss. It's that simple. Price is good above the white line and it's bad below. Done. Twitter, well, guess what? We're all tweeting and it ain't helping. Visa, kind of like MasterCard. It's below the 200-day right here. Nothing special. Anyway, that's an overview on the MAXLIST stocks. Overall, they don't look that great. It can change. And we'll be ready. We just don't impose our will on it.
Thank you for watching the video. We hope you enjoyed it. If you did, please hit like. Maybe hit that subscribe button. We come up with new content nearly every day. Also, check out the videos on the right. YouTube recommends the one on the top, and the bottom one is something we thought you might enjoy. See you next time.